Okay, we have something going. We're just going to post the link across to a couple of places. I'm sorry this is a little slow. We've got some equipment that actually keeps the phone steady, so you're not going to see the moves that used to happen earlier. Hi folks, we're going to talk about budget 2016. I'm sure there have been a lot of questions. If there are, just post them as a note either to Deepak Shenoy at Deepak Shenoy or at capitalmind _in. We'll get both of them. Let me just, I'm just going to see this together. Let's see if I can move this away. Okay, here you go. Sorry for the messes of wires and lots of monitors and all that stuff. That's just the way our system is. Okay, here you go. Okay. Yep, we should be fine now. So we're gonna just take a quick look about the budget. So one thing that's happened today is that Mr. Arun Jaitley has come. He's talked a lot and he's given us a bunch of budget documents, most of which are going to take us a lot more time to decipher. You know, the budget explanatory documents need explanatory documents on top of that, because they're written in language that you're like, oh, what does that mean exactly, and why does this, you know, not apply to that, and so on. Here's the gist. If you're an individual, this budget means more tax. If you're a startup, this budget means probably a little more tax, unless you plan to start up in the next year, in which case, in some cases, a little lesser tax. That's about the summary of, you know, what's really happened. It's great for farmers most likely, and we're not really sure how the government numbers are added up. I think there's a little bit of religion involved in this whole number calculation business, but let me give you the gist. I mean, let's go back to the first thoughts of what people are actually expecting. There have been no tax cuts in reality, except for if you earn less than 5 lakh rupees, you're going to get a 3,000 rupee extra rebate. So you can pay 3,000 rupees less than you would have paid this year. This applies from next year onwards. If you're rich, that you make more than 1 crore rupees, you're going to pay 3% more in taxes. So instead of a 12%, not 3%, I mean the 3% higher surcharge. So earlier it was 30% above 10 lakhs and I'm sorry, close that. So there's a 10%, there was a 12% surcharge on income that was greater than 1 crore rupees. So if you made 1 crore, you would pay 30% plus 12% of on whatever was about 10 lakh rupees. Now you pay 30% plus 15%. So that's for the ultra rich who probably aren't listening to this periscope. So I shouldn't probably address that. But here's the other thing. If you're a dividend receiver, which is what a lot of promoters are currently in the scheme of things, and you get more than 10 lakh rupees of dividend a year, your dividends are no longer tax free. So Mr. Azim Premji, who owns 75% of Wipro or 65% of Wipro, he probably makes a few hundred crores out of Wipro dividend every year. He is now going to have to get that dividend and then pay another 10% of tax on that dividend as a whole. He can't offset any income expenses around it. So this applies to anybody who receives more than 10 lakhs rupees of dividends a year. This applies if you get 10 lakhs rupees of dividend from your mutual fund a year also. If you had structured your income such that you would have gotten income as dividend from mutual funds, remember that anything above 10 lakh rupees, you're going to pay 10% tax on. So the first 10 lakhs is free, the rest is a 10% dividend tax applies. Remember, dividend already comes to you after the company has paid 28 odd % of tax on that dividend. So if you get approximately 80 rupees of dividend, the company's probably paid another 20 rupees to the government before paying it to you. So they made 100 rupees that they wanted to distribute. They distributed only 80 because they had to pay 20 to the government. Now you're going to take that 80, and some of you who get more than 10 lakh rupees of dividend are going to pay another 8 rupees. That's 10% of that 80. back to the government. This is another interesting piece. Apart from that, we've done a bunch of posts on it, and there's a lot of data out there. Let me just try and check these out. So you've had a pretty interesting set of new taxes that have come out. So first is, you buy a vehicle, you're going to pay a pollution tax. This is before you started polluting, but obviously this is not going to be charged to people who are already polluting, so it's kind of a waste of time in that sense. But it's money you have to pay. 1% more for petrol small cars, 2.5% for diesel cars up to a certain amount, and then above that, so this applies to trucks and to heavy SUVs and so on, they will pay 4% more. So if your car costs 10 lakh rupees and it's an SUV, it's going to cost you 10 lakh rupees and 40,000 now onwards. I think this applies immediately. I'm not sure of, typically a tax like this applies immediately. What's very interesting is that apart from this, if you buy more than pay more than 10 lakh rupees for buying a vehicle, the seller has to take 1% extra from you and deposit it in your tax account, saying that they're going to collect your tax at source. This is not a tax on the car. It's just a mechanism for them to say we're going to pay tax on your behalf. So when you buy a car, you're going to have to keep a PAN card handy, especially if it's more than 10 lakh rupees. So this does not augur well for companies like, say, M&M and Tata Motors, perhaps in some of the bigger vehicles, and trucks obviously, and to Ashok Leyland and a couple of other companies here as well. The problem really is not that you have to pay that 1%, it's prepaid on your behalf to the government, so you can offset it against something else that you needed to pay. But the fact is, a lot of these people who bought these cars did not want to reveal their PAN card information when they bought these cars. They're probably buying it out of money that didn't come from the appropriate kind of sources, or they just didn't want to reveal that they were the ones buying this car. Now you can't do that anymore, and that's probably going to crimp a lot of plans of some of these fuel guzzlers and perhaps people who own a lot of black money. With black money, we've also got an amnesty scheme. So if you got black money, you're going to have to, you will need to declare it. Now this doesn't really work very well. Last year you had an amnesty scheme for foreign people who had money stashed abroad. So this year you have an amnesty scheme for income that is in India that has not been taxed so far. You just pay 45% of that money and then you take it out. What's to guarantee this money will actually happen? Because people are looking at this and saying, listen, 45%, that's risky. I don't want to take that risk. Maybe I'll just hold on and keep it with me for a while under my pillow. Anyway, the taxman doesn't seem to want to go after people who really don't pay tax. They'll go after the small guy. They'll go after perhaps some big businessmen, but they don't really go after the people who have or will have a lot of money. Okay, won't people with black do Section 44 AD and pay 8%? Yeah, well, you could, if the black money is restricted to 2 crores, I think, there's a new thing. Earlier, the idea was if you had a 1 crore income, they just say, okay, boss, your income is 8% of that, that's 8 lakh rupees, you just pay tax on 8 lakhs and you're done. You can do that now with 2 crores, so it goes to 2 crores and 16 lakhs of presumptive taxation, and then you go on. So your income is 16 lakhs. It's not just the tax itself. I think that's the thing, but I haven't seen the numbers actually. But here's the other thing, it's if you have a small amount of black money, it can be whitewashed this way. But I think people with larger sums of black money will not be able to do this. This will only work with an aggressive tax collection, tax enforcement regime, which, to be honest, we've not had on people who are outside the tax bracket. We seem to have them only on people who are already paying tax. So, just a quick note, I'm going to take a look at anything that's been coming in. So, yes, that's the thing, it's too small, yes. What about professionals? Okay, sorry, this thing is like a little turned around, so I'm not sure if this is going right. Okay, so the thing about professionals is, I think they've had see, as a professional you don't get HRA. You got to offset 24,000 rupees of rent per year from your income, but obviously this is not enough, because 2,000 rupees, I mean, people who are like at very, very low income levels pay more than 2,000 rupees a month. as rent. So they've said we'll increase that and we'll push it to 5,000 rupees a month, so 60 lakh rupees. I'm sorry, I didn't see that last question. The screen is a little off. But yeah, I mean the presumptive, the tax benefit for professionals has been increased in the sense that they get to reduce 60,000 rupees a year from their income. This may not mean much for people here because 5,000 a month is still too less, but it's a benefit nevertheless. How would you find the budget about where the money is coming from? So here's a big problem with the budget. Okay, I'll name the first 8 big expenses of the government, and you tell me where they're going to cut from. The first biggest expense is interest payments. You can't cut interest payments. The second is defense, both capex and so you add them up, capex and revenue expenditure. Then you've got food subsidy. Then you've got fertilizer subsidy. Then you've got pensions. Then you've got police. The government spends 88,000 crores on police per year, central government. And then there's a bunch of other stuff. These 5 or 6 items actually constitute something like 70-75% of the government's total expenditure. So where's the room to cut? I mean, you can cut a little bit, 100 crores here and 100 crores there, but bulk of income is stuffed in these little elements which are tiny. Look at social expenditure. It's nothing. It's part of that remaining 20-25%. It's a tiny amount on things like toilets or education or healthcare. It's much smaller as a percentage. So that's a little disappointing. But you've got to cut in some of these larger places to be able to spend more, and that's not happened really. One of the things that they've talked about, yes, is agricultural income greater than greater by 2x by 2022. That's coming out of your and my pocket because that food is going to rot. They're increasing income by inflation. They're going and telling farmers we'll double your income, except when they double their income, what they're doing is they're going to go to the open market and pay double the price for the same thing. If you pay double the price by 2022, you're talking 6 years. That's 12% inflation on food from here. So rice, wheat, pulses and all that stuff, that's going double by 2022. That's not because people are going to produce more food. It's just that the government is going to pay double of that. So watch out, 12% inflation by the government per year is coming for the next 6 years, whether you like it or not. What about EPF? EPF and PPF, there's a whole big problem over here. Your EPF was tax-free. Yes, presumptive tax for professionals. I haven't seen that. I'll just come back to you on that. Okay, so let me go through this part, the EPF part. You as an employee would put in 10% of your money, and your employer would put another 10% of your salary as a contribution to your employee Provident Fund. So this money was supposed to be something that was available to you when you're 60 or 58, whatever your superannuation age is. Now it's been fixed at 58. You can withdraw the money at 58, and it was tax-free till today, or till April 1st, 2016. After that, whatever contributions you make after 1st April into your employee Provident Fund. Remember, not public Provident Fund, only employee Provident Fund, which is a super or a registered, like your company Provident Fund, if it's a registered Provident Fund. When you take out the money, 40% of it is tax-free. It was 100% earlier. 40% will be tax-free. The remaining 60% you're going to have to pay tax on. It means it gets added to your income. The way the structure is currently, it's unfortunate, but the problem is they had to equate it with the national pension scheme, which was or the new pension scheme, which basically allows only 40% to be tax-free, which is what they've done again. So if you're an NPS subscriber, the weird thing is if you have 100 rupees in your corpus, you can actually withdraw 60 at superannuation, and 40 goes into an annuity which pays you a pension every month. That pension is anyway taxable. But out of that 60 that you take now, 40 is tax-free, the remaining 20 is tax. So that's the super structure. It's a little confusing. It's probably unnecessary, but they had to do a lot of stuff to bring some of these things into the tax bracket. Rule number 1, don't invest because of tax benefits. The government will take it away from you at the time they want to, and there will be a lot more of this. They have grandfathered this act in the sense that if you were already a payer till April 2016, whatever payments you already made will not attract tax even when you exit. That's 100% tax free even when you exit. It's 40% of whatever you put going forward from here, from April 2016, that's going to be tax free. 60% of that is going to get taxed. So it's a complex calculation. You had 100 rupees, you put in 10 more rupees, the 10 rupees. By the way the EPF also works is that there's no concept of principal and interest for them. The entire amount of money that you receive is considered your income. Now, if you assume you're a fresh employee starting on April 2016 and you're going to retire when you're 58, so let's say that money comes to 50 lakh rupees, all of the 50 lakh is counted. So 40% of that, 50 lakh of 40% is about 20 lakh rupees. That is tax free. 30 lakhs, the whole amount is taxed. Even though it was your principal, right? You got you probably put 10,000 rupees per month, and over the years you might have put in only about 20 lakhs, which became 50 lakhs. So you think of it as, I put in 20 lakhs, I got 50 lakhs, I should be taxed only on this 30 lakhs, right? But here's the thing, what they are saying is that the whole amount, whether it's principal or interest, is taxed, and they've given you a little bit of a relief saying 40% of your income is tax free. So 40%, so 40% of your total corpus is tax free. I hope that clears up things. It's a little complicated here. Anything on subsidy rationalization and on listing? So they've talked about listing. I haven't gone through that. There's so much in the budget to go through. Subsidy rationalization, well, they've talked about fertilizer subsidy going direct. So they've said we'll pass it direct to farmers, and that's a good thing. I think you could. So let me see if this is in. Yeah. No, we haven't had anything else. Any other?
Using JAM, they'll be passing on the subsidies of fertilizers.
Oh yes, they'll be using the Aadhaar mechanism to pass the subsidy on to farmers who use the fertilizers. So that's what they're going to do with this. We've got Akash, Sunil, Venki here as well from the Capital Mind team. We're all trying to decode the budget, and currently just about keeping up. We hope we don't fail miserably, but that's the way it is. So here's the other interesting thing that happened: accelerated depreciation. I'm sure Miss Kiran Majumdar Shaw would have already been very unhappy, and she does not like this bit at all. It's not just accelerated depreciation; it's a lot of incentives that were provided to companies like Biocon, such as investment in scientific research. So you got 125% or 150% some reduction on the amount you spend on research. Now that's capped to 100%. Accelerated depreciation is capped to 40%. You've got, so it was 100% earlier. So Suzlon, for instance, you could have invested in a windmill. You pay something like 1 crore for it. You get the whole crore off as depreciation. Let's assume you're a film star, and you're a film star who has a lot of income, and you need to somehow, it's white income, it's good, clean income, but you need to pay a 30% tax on it. So what you do is you buy a windmill for 1 crore, you take that crore and you say it's depreciated. The rules allow you to depreciate it 100% in the first year. So otherwise you'd have to depreciate it over time because it's an asset you purchased. So you depreciate it in the whole way. You get the full 1 crore off of your tax, and then you get income on top of that. So, and then you still have the asset, so you can still sell it to somebody else 2 or 3 years down the line, make long-term capital gains, pay less effective tax. Companies like Suzlon made a lot of money through this. The removal of this exemption is probably going to affect them in the longer term, because a lot of people make investments in things like windmills primarily for accelerated depreciation. Now it's capped to 40% a year. So you're going to take what? 40% in the first year, then 24, because the remaining 60 or 40% in the next year, and so on. So it's not as attractive as it used to be. There are a bunch of other incentives as well. Let me just take a look if I can see something. Okay, so we've got a bunch of other things over here. Okay, so here is the other part of the budget. We've had a fairly rural oriented budget. There's a bunch of stuff for rural people, and they want to spend 2,000 crores getting LPG connections to every household which doesn't have one. This is great because you don't have smoke in those households. It'll save firewood. It will give people accessible fuel. Otherwise, they'd have to go find it. Imagine spending 4 hours of your day trying to cut wood. So yeah, I mean, you're right. I think people will have to spend 2.5x of the amount that they used to spend to get the same benefit. It's a little bit of a problem. Yeah. So let me go back to rural India. There's 2,000 crores being spent on LPG. Think of this, okay? 2,000 crores is a tiny amount, and this can actually give almost a very large number of households LPG connections all over the country. And because now there's no LPG subsidy, it just comes directly to your bank account. And believe me, some of these people will pay for LPG if they can get it. But the corruption in the public sector system and the fact that you needed a address proof, a parent's address proof, somebody else's address proof, this proof, that proof, you couldn't get an LPG connection. It was hoarded by these people who ran these agencies for public sector marketing companies. Now, the government is saying, I'm going to go through and I'm going to give everybody connections whether they like it or not. Why? Because there's no subsidy. Essentially, if you wanted a subsidy, you could actually say that the subsidy is only available for the poorest of the poor. It's going to go directly to their bank accounts. There's no point hoarding connections. This can change rural India substantially. There's also a large amount of money. I think it's 97,000 crores that's going to go in for roads alone. Out of which I think 30,000 crores is going to go for rural roads. And 55,000 crores, or is it 35 plus 15 or some 55 plus 15? There's a large number that goes into NHAI for building highways. So you got rural roads, you got highways. This is base infrastructure the government should be building. We know that they're going to collect this money out of our taxes. And that's fine, because if you're using it for giving rural LPG connections, that's great, because eventually they're going to pay for that LPG. All you need to do is get them a connection. That's fantastic because they come onto the network. There's stuff in there that's like teaching digital learning for the rural sector. You're going to go in and the government is going to teach you how to use a mobile phone. I'm not sure we should even be spending money on this stuff, because it's not about the learning of the mobile phone that's more complicated. It's going to be everything else that's associated with it. I mean, apart from the first fine, the 3,000 rupees to buy the mobile phone in the first place. But I don't think they need training on how to use a mobile phone. They need an ecosystem that allows you to use the mobile phone easily. For instance, if you're taking your payments only in cards and these people don't have cards, what are you going to do? They may have bank accounts, but they won't. You're giving them a bank account without any online access. It's the lowest end. You have to fill a paper receipt to get money out of this kind of a bank account, right? Or even an ATM card, which probably won't even work on it. So there's that is going to be a larger problem in the digital challenge. It's a very interesting thing that's moving. So one other thing that's starting to happen. Let me just see if there are any questions on Twitter.
Irrigation. Irrigation.
Oh yeah, there is something on irrigation, but I haven't seen something on irrigation yet, so I haven't done the analysis. There's some money that's going to be spent. I think 8 or 18,000 crores that's going to have to be spent on irrigation. This is going to be an interesting year. The El Nino's receding, and we're going to probably see a La Nina by the end of the year. So we'll be expecting a normal monsoon. When you have a normal monsoon, most likely water flow is going to be correct. India actually is very, very, very bad at retaining water. We let water flow and typically it flows out into the sea from our rivers, our lakes, but it doesn't really get collected and irrigated into farms and stuff. And there was a whole river interlinking program that was supposed to have been started, and that's gone nowhere. But there is a larger irrigation program that will help in multiple ways. The government will spend money on acquiring pump equipment. There was a pump provider, I think Shakti Pumps, that was up some 17% today. And there's a bunch of other guys in the space like Finolex Pipes and I think Jain Irrigation. Jain Irrigation was up 4% at the time he announced this. It ended down 2.5%. So I don't know what's happening over there. Maybe this black money amnesty scheme, I mean, I don't know which part of it affected it, but some part of it was obviously not good enough. Is there any out-of-box thinking for the budget? I don't know. You're in a box inside a box. There's a political box, an economic box, and God knows what other boxes. So there is this whole mentality of saying I've got to handle UP elections, I've got to do rural distress, I've got to tax that rich bugger more so it doesn't affect me. We have, yes, you're right. In fact, he even talked about incentivizing card payments. In fact, they talked about it 10 days ago. We should incentivize card payments. The number of incentives for card payments in the budget, 0. There is nothing that incentivizes card payments. Okay, so I don't know what's happening, but you see, here's my larger perspective. Why are we doing this stuff in a budget? If you want to incentivize a card payment, you don't need legislative approval from a bunch of people who only exist to boo you down. You are an executive and you can do it. You can tell people that, listen, we won't charge you any extra money to pay the government fees of whatever kind you want to pay, like your property taxes, income taxes, whatever. You can pay them through your cards and we will charge you nothing extra. There is no problem in saying that. You don't need parliamentary approval for saying that. So these things don't belong in a budget and they should not have been part of a budget. Unfortunately, this the budget has been all strange. Yes, also it's a lawyer's budget. There's just too much stuff sitting in annexures. We haven't even read the whole thing yet. It's like, it's in clause A of part 5 of 3 and all that stuff, which is a little more complicated. What happened to markets today in the budget? I think China was down for the most part, so that hadn't affected us. And then we kind of started doing, we're going to make the fiscal deficit, let's go up 30 points. Oh, this guy's going to do something bad, he's going to increase taxes, let's go down 120 points. Let's go, he's going to put black money amnesty scheme, let's go up 150 points. So it's been like that today. The real story will come back tomorrow. Here's the good part. The 10-year yield was at 7.82%. It's down to 7.62. That's a 20 basis point fall, which is big because what it believes in is that RBI is going to probably try and cut rates now. The conditions are okay for it. It's not great because inflation has still been rising. Remember, it was 5.6%, was 5.4% earlier. So it's been rising and it's reaching that number of 6%, which the government itself has said is too much. So it's unlikely that the RBI is going to immediately cut rates, but at least the fact that the government is sticking to its fiscal target of 3.5% means that it will possibly do a small or maybe a 25 to 50 basis point rate cut. Now, it doesn't have enough ammunition. Again, I say this because we're probably a little early up in this process, because I think with inflation going up, we've got an issue with the RBI suddenly trying to cut rates. At best, it's going to say, okay, let's see what happens now. Remember, service tax has been increased to 15% from 14.5. A lot of taxes have been increased. A lot of end user taxes have been increased. This will cause inflation. Plus, you're telling farmers, I'm giving you a 12% raise every year till 2022. This stuff will cause inflation, whether we like it or not. So, RBI is going to be cognizant of that fact, not going to jump and say, these guys met their fiscal target, let's just cut rates. It's going to look at this and say, dude, I didn't like fiscal deficit for one reason, that it would cause inflation. If inflation is coming anyway as a result of your policies because you added more taxes, then you know what, forget the fiscal deficit. You gave me inflation directly, I am not going to cut rates. That might be a part of the thinking that the RBI goes through going forward as well. One of the things that you also want to look at is the fact that while the fiscal deficit target has been kind of reached, we've also had a significant increase in taxation, and therefore some of these assumptions on revenue are probably shaky, right? Okay, let me give you an example. I gave you accelerated depreciation of 100%. You built 5,000 windmills. I cut that accelerated depreciation down to 40%. Are you going to build 5,000 windmills next year? Most likely not. You're going to probably build 50 windmills, 100 windmills. My revenue went down from 5,000 to 50 or 100. My taxes to you are going to go down. Your revenue as a government is going to go down. Your revenue estimates are probably very, 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 so they're more than 10% right now. So service tax and central excise and so on are supposed to increase by 10%. Personal income tax is supposed to go up by 15 or 16%. I don't know how, but I think it's because of the bigger dividend tax and some taxes around. I think Akash did the calculation. It's about 8,000 crores more for just vehicle cess if the same number of vehicles are sold next year. 8,000 crores is what the government will earn extra. There is also potentially a larger amount of money that they will earn from a large amount of money they will earn from the dividend tax. Rough calculation on dividend tax. The market cap of the Nifty companies or the BSE companies are about 1 lakh crores, give or take. Typical dividend yields are around 2%. So you're talking 200,000 crores being paid as dividend. Out of these 200,000 crores, let's assume that only 50,000 crores goes, or 40,000 crores goes as tax, as goes to individuals. The rest of it goes to mutual funds, to FIIs, to companies who are not taxed, or even to the government, which is not taxed. So the extra dividend tax only applies to individuals, HUFs, and partnerships. Therefore, or firms. Therefore, if you look at it from that perspective, how much money do you get as a government? So if 40,000 crores comes in as dividend to these people, assume that a good part of it, or 50, let's assume that 40,000 crores is the total amount of money that's paid. 10% of that is about 4,000 crores. A little bit less than that, maybe 3,000 crores will come as the extra dividend tax as well. So these are all items that add about 3 or 4,000 crores in taxes. If I looked at take a quick look at the memorandum somewhere here, but I don't know where it's gone. Boom. Okay. There you go. Yeah, I have it. So we've got a fairly large revenue target. I think this year they made a revenue target which is higher than the estimate. They estimated about 11.4 lakh crores. They made revenue of 12.06 lakh crores. That's 60,000 crores, 65,000 crores more than they'd estimated. I think it's the first time they've actually beaten their estimates in a long time that I've seen, and largely because of the higher excise duty on crude. The target next year is 13 lakh 70. So I'm talking about an increase in revenue from 12 lakh crores to 13.8 lakh crores. That's 1.8 lakh crores more, 15% more revenue. How is the government going to get 15% more revenue when your inflation is probably going to be around 4% in WPI terms and about 7% of growth? So you're talking 11% of GDP nominal growth, maybe 11.5%. You are not going to be able to tax India so much more that you're going to get a revenue income. Remember, none of this is about disinvestment yet. Revenue receipts of 15% more. I'm a little skeptical about them being able to achieve their numbers. I think as much as we've seen a positive surprise in collections this year, we're not going to see that kind of a surprise next year. Okay, so if there are any other questions, I can take them.
Kidney dialysis.
Oh, there's a bunch of things for rural things. We got 12% increase in MSP to. Okay, 12% increase in MSP would boost rural consumption, rural production. I don't think so. If you look at the structure of MSP, it's very bad. Okay, in the sense, most of the production is on rice and wheat, and we haven't changed that much. I think pulses this time gets added. This is a good time to add pulses perhaps, but production is going to be a significant number larger than last year for pulses because pulses prices went up. I wouldn't be surprised to see pulse prices drop to 25-30 rupees a kg this year from the 180 that it is. Now, if the government puts its foot in and says, oh, no, we'll pay you 100 rupees, that's mine and your money that's going to go for the government to acquire pulses and let them rot. What's the point of that? And FMCG is probably, FMCG is a good thing for the rural sector if the rural sector incomes actually go up. We'll have to see how that goes, because NREGA, which is the money for kind of hanging around scheme that was introduced a few years back, they're going to put about 38,000 crores in that, so that's not a big increase, but we're going to see just one second, make sure that we have sorry. Okay, there you go. So we've got rural consumption that might kick in because of this, and I think it's bigger because of the roads. It's also a huge amount that's going to go to each panchayat. Gram panchayats get 80 lakh rupees each. This can actually fuel a lot of spending. So FMCG, two-wheelers are likely to go up. And remember, none of these extra taxes apply on two-wheelers. Though, yeah, it applies only on cars. It's not on two-wheelers. And therefore, we might see a good consumption move from them. Also, we have a couple of big states going for elections this year. So it made sense for them to do something, for rural consumption. If rural consumption were to actually go up and we have a decent monsoon, I think, yeah, FMCG is a great point. Okay, we'll do the recap of EPF. You as an employee are most likely paying Employee Provident Fund every month. And your assumption when you did that was, when I put the money in, it's not taxed because I can use it under the ATC scheme. As the interest accrues 8.5, 8.10%, the 8.1%, 8.7%, that interest is not taxed. So it's exempt on entry, exempt on accrual, and exempt also on exit. So you always were able to take out the entire money and not be taxed at all. So no tax anywhere in this whole picture. Things change. Till now, whatever money you've put in continues to retain that agreement. You will not pay tax on exit of this money, including the interest you earn on this money till now until you exit. Any fresh money you put in from April 1st, 2016 onwards, that is taxed in a special way. 40% of that plus its associated interest will be tax free for you. 60% is taxed, and that 60% will be added to your income and taxed at whatever income bracket you're at. So whenever you exit, you can exit in parts, of course. So you can still take part of it and a little part from the first time and a little part later and so on. This equates it with the National Pension Scheme or New Pension Scheme, NPS, where you got a certain amount of money as cash. They call it. You can commute this money. So you take a certain part of your corpus as cash, and you take the remaining part as an annuity, which you buy from an insurance company. And it pays you a monthly pension over the time, maybe till you die or for till the time you and your spouse are living and so on. So the annuity payments anyway are taxable. It's like income that comes to you. You have to report your income and pay income tax on it. NPS was always taxable on the annuity front. So now what they've said is, okay, whatever corpus you generate, 40% of that is taxable. Is tax free. 60% of that is taxable, just like NPS. This is different from earlier, where 100% was tax-free. Affects you, but not as bad. Remember, it also does not affect PPF. PPF is not a retirement scheme. It's a 15-year voluntary provident fund. It is not something that is applicable in these regulations as far as I know. They have just said registered provident fund. PPF is a public provident fund. It's not a registered provident fund. It's not a superannuation fund. So it doesn't seem to apply in these regulations. Cool. Thanks so much. I think we've had a lot of questions, a lot of time, a lot of light changes. This is Deepak from Capital Minds signing off. Bunch of monitors, bunch of work to do. Keep watching capitalmind.in. We'll have a lot more stuff. We'll do another look on the budget as soon as we understand all of it. There's so many things in there that we'd like to. We really appreciate your watching this, and I'll try and put this up on YouTube soon as a video that we've created so that you can watch it later as well if you missed it. Thanks very much, and we'll come back to post at capitalmind.in, capitalmind_in, or at Deepak Shenoy on Twitter if you have any questions on what we said. Have a good day, and don't worry, you're just going to pay extra tax. It's not going to be the end of your life. There's always next year for no other.